Good weekend, all. Ira Epstein of Linn and Associates with your metal market wrap-up for the weekend edition on this Friday, the 12th of November, 2021. It's nice to be back. I had a ball in Mexico, one of the best vacations I ever had. You know, here I am in my mid-70s. I have not taken 2 weeks off. And we tried to figure out the last time. I know it was in my 20s. It was not from the time I've been 30 years old on. That's a pretty strong work ethic. My wife finally said, I was coming home. I was booked to come home a week before. I was only going to be there 7 days. I was having a ball. I mean, if you've been to, I was in Cabo San Lucas, just wonderful. 80s during the day, nighttime 70, the food inexpensive, the people wonderful, full of Canadians. That was the big crowd. Had a ball with them. All right. So as we're looking at the markets, you can't get away. Gold's in the 1860s. I'm still questioning if 2000 isn't the number we'll see in the early, and I use the word the early part of 2022. Silver market back with the 25 in front of it. I thought that the copper would go back into the 450 level before I left. I said that I think it'll get back towards that 18-week average of closes, 18-day. It's doing it. Dollar, strong at the expense of other markets. And the metals are rallying as you're breaking in the energies a little bit. That's another sign of strength for them. So where's the gold fighting a battle right now? It's the 18-week average. It's the 1830 level on a monthly chart. This is your monthly chart. So on the monthly chart on the bottom, we have the slow stochastic. We've got the swing line, and you've got higher lows, higher highs. You're over the 18-week average. The trend is up. The target is 1977 on a monthly. And if the market takes out 1744.5, let's call it, then I have to rethink my analysis of the chart. When I go to a weekly chart, just the closes, sometimes this is the simplest way you look at it. You had a momentum shift. And the shift occurred, it began right here the week of October 22nd. It was the first week we got back over. Now, we had done this before and we failed. And when we came back, just before I left, this is October 29th, right? I said, watch out. Now, if it's good, it's got to get back up over that high, which it did. And that was the key to the market, that the market held that. Now you know if you don't get back under that low, I cannot tell you on this how high it'll go. I could put Bollinger Bands on it. They might tell us. That's something you might want to do. By the way, when I was gone last Thursday, just this past Thursday, out in London, there was a technical conference. John Bollinger was speaking, so I signed up because I wanted to see John. I haven't seen him in years, and I saw him through that. And I even got mentioned because they were talking the old FNN, which is now CNBC. And what people don't realize, I owned at one point probably 25 to 30% of all the advertising on that station. I was that big of an advertiser. This is before they brought in the GMs and all the big names that eventually came in and sold the company, and then it became eventually the CNBC, where nobody like me can afford to do that. This is now for the big banks. They're the only advertising you see on it, basically. Think about it. It's just Fortune 500 companies all the way through. But when you take a look at the chart action, and I want to get back to that, that's hard to be bearish, that type of action. You have higher lows, higher highs on a weekly chart. When did this all come about in being? Here was October 29th. The key was now this. You had an outside week up. That was it. There's your trigger. You shouldn't get back under 1758.50, and if it's going to come alive, I'm going to ask you, where are the moving averages? You tell me where the battleground was. I was there with you, pointing them out before I left, and I said, this is going to be an important time. You're pulling back. What's going to happen? And with that, now, where could you go? Well, one of the key resistance points you hit, 1867.90 has been hit. So to me, rather 1869 is the close, 1853.30 is the number. Remember, I'm just back, so I got to look at it. You're over it. You're probably not running that much on a straight line to the upside. You don't stay over Bollinger Bands more than 5% of the time, but you have a breakout. Now, if the market wants to prove it's a breakout, let me give you a secret. One of the things I noticed in my analysis was that when you get something like this, if the week after you follow through, make a higher high, close higher for the week after, and in the top quadrant. Quadrant is a simple word. It means you're dividing the range of the chart into fours. I consider that then a legit breakout. That does not mean you have to run straight up. It means you're not visiting that again is the really big likelihood. What about momentum? Well, the slow stochastics momentum is up. They're overbought. That fits in that you're going to have some resistance up here at the upper Bollinger Band. That is not a get short signal. That might be one thing to take money off the table. I don't think I'd be playing the short side off of any of that. Then we get to something else that tells you to be friendly. Notice we're just at the point where the silver, this action is like the gold when it fought the battle the other way at the 18-week average. Now, if this market's good, you're going to get through, I'm going to come back right here, you're going to get through this number, 73.44, and you're going to do it with a jolt. If that occurs, silver takes the leadership on gold. Now you got all the metals firing at one time. When we come to the silver chart, you're approaching an overbought status, and how that fits in is you're not over the upper Bollinger Bands. You can get that little bit of a sway that comes into it. So unless you take out 2304.5, I think the bulls have grabbed control. Target 2610.5 if I'm right on that. Doesn't mean I will be. On the break from this top, I told you that when the market was coming down, this was back here. And there's another, not a breakout. This is the chance for it. You made the higher high, but you closed lower. That puts you back in that maybe you're going to fight a battle at the 18-week average. That's just what the market did and is doing. What is the pattern going home? Higher lows, higher highs. Momentum, which had been correcting, is no longer in that pattern. Now, where the market would get ugly, because you got to look at both sides, should you go back and take out 427.80, that could give you then lower highs, lower lows, saying that you're going back to 411. Don't take that out. 462 is your next upside resistance in the market. In the platinum, uptrend. When's the last time I had the opportunity to say that with you? This is the last week, and then I left. Remember, I left town on Thursday. You pulled back just like that. Okay, if you take out 1064, you have a play here of then potentially higher lows, higher highs, with wherever the Bollinger Band comes in as the resistance. You tell me what's going on. That's exactly it. Now the key is, I think that you'll find big support against the 18-week average of closes, this 1019.60. Traders won't want to see 1005 taken out. Wouldn't get embarrassed. You would just ruin the bullish play. And in the dollar index, hi-ho silver. Away you go. But you're fighting now at the 200-day average, the upper Bollinger Band. The smart money's coming out of the dollar up here. I know you won't agree with me, and I get it, and that's fine. That's what I teach, and that's what I believe. The odds of staying over the 200-day, the 100, and this hard. You want to get the chart action to consolidate a bit more. Plus, I'd want to see some embedding. So are we going to embed? Well, let's take this. Both numbers are over 80. Not here. So the fifth, they were not. First week, we've got it. You're overbought, can't embed. I'm looking for pullbacks on that. You know, when I was gone, I did not miss a beat for my paid subscribers. Each morning, and there were times they moved to Pacific time, which killed me, 2 hours earlier than Chicago. So I'm normally up here at 4:30. That's 2:30 in the morning. I'm not getting in until 12:30. I was exhausted. For a week, it killed me. My next vacation back to Mexico, I will not be in that week where you get that time change. 1 hour, I dealt with perfect. That 2 hours, no, it was a killer for me. And my wife said, it's making you miserable. Thank God we had a great pool and I was sleeping and that was it. But I covered both the weekly charts, the daily, the morning updates, telling you buy here, sell there, no missing of a beat at all. Remember, in futures, I cover all these 40 charts ETFs, another 40, covering similar, but now the special names, the Apple's in there, Tesla's in there. I'm really covering a lot of stocks, and we'll do more. Look for me to announce come Monday our first webinar since I'm back. I'll try to do it this coming Wednesday. That's what I'm clearing the deck for. You'll get an invite. We don't have to send it out right now. And if you want to become a subscriber, it's so simple. Go to our website, www.iraepstein.com. Under the word research, it's there. It's going to get fun into the end of the year. Remember Santa Claus. I think he'll be here. You take care.